Welcome back. You're still tuned into Mid-Cap Radar on CNBC-TV18. It's time to focus on PG Electroplast now. Brokerage firm JM Financial is bullish on the stock. They've initiated coverage with a buy rating and target of 2,430 rupees a share. They say that addition of new product segments and customer addition in segments like EMS will drive growth for the company. To discuss this and more, we are joined by Vikas Gupta, the Managing Director at the company. Mr. Gupta, good afternoon. Thank you so much for joining us. But I wanted a sense of if you're on track to achieve that specific Q4 guidance that you'd given, sales guidance of 1,075 crore rupees, EBITDA guidance of 100 crore rupees, and the fire that happened recently in one of your factories. Will that impact the guidance that you had given?
So, good afternoon. First of all, let me reiterate that the guidance that we are given for Q4, we are sticking to that. And we are confident of achieving the numbers that we have given in our guidance for Q4. Regarding the fire that we had in one of the warehouses where we used to store some raw material, that was an unfortunate incident, but that does not have any impact on the production or on the revenue that we have guided for Q4.
Mr. Gupta, so for FY24, if we recall correctly, you had given a top-line guidance of close to 2,800 crore, and an EBITDA guidance as well as the EBITDA margin guidance of close to 7.5%. So are you on track to achieve that? Can you exceed that? In FY23, you had managed to exceed that, and JM Fin expects you to exceed the FY24 guidance as well.
I would like to stick to the guidance that we are given. We are already in the almost end of the financial year. And we are confident the numbers that we are given in our guidance, we are going to stick to that.
Okay, so you'll be able to achieve your guidance. We'll see whether you surpass it the way you did it in FY23 or not. Mr. Gupta, let's talk about what's driving this growth that you're talking about, especially in Q4, because you've seen a quarterly run rate of around, 532 crore rupees or 500 crore rupees thereabouts. And now in Q4, you're talking about 1,000 crore rupees in terms of revenues. What is it driven by? And is it because of newer segments you're adding, better margin performance? Can you explain that to us?
Please understand, for our company, always the Q4 and Q1 are very good because those are the peak production and sale months for the air conditioning and the other air cooler products also. So we are seeing a very strong growth in air cooler and air conditioners. And for other product categories as well, we have created a kind of a funnel of products and the clients, which is helping us driving our volumes, and we are bullish and we are very confident of continuing to grow in all our product categories that we are working on.
Okay, Mr. Gupta, so a couple of years ago, it could be said that the plastic molding business was the business that was giving or contributing maximum to your top line. Now, by the end of FY24 and FY25, what will be the revenue mix at your company, given the fact that you're consistently adding new product categories? You've gotten quite a few customers as far as the washing machine category is concerned. So what would be the overall product mix? And FY24, what will be the total number of clients that you have as far as the washing machine business is concerned?
Please understand, for our total revenue, definitely a few years back, plastic molding used to be a major part of our revenue. But we have pivoted our company towards the product manufacturing. In the last 5-6 years, we have invested heavily in developing our capacity and our capabilities in our air conditioners, in our washing machine business, and that are bearing good results for us. And for the revenue breakup, air conditioners should be around 1,300 to 1,400 crores in FY24 for us, and the washing machine should be almost around. And so coolers will be almost around 40-50 crores. Electronics is one big category which has grown very rapidly for us, and we are very bullish, and we are experiencing more than 100% growth in our TV business going forward. So for us, all the products are firing, and we are very confident in the coming quarters also we'll be able to in the growth momentum.
Mr. Gupta, I just wanted to follow up on that electronics business, because you're talking about 100% growth in that business. Would that impact margins in some way? Because usually that is a low margin business as per the industry data. How do you look at margins panning out in that particular segment?
Please understand, for televisions, we have already made a joint company with China Group. and we will be moving business from this PG Electroplast to a JV company. And we have created a new facility for TV manufacturing, which is one of the best TV manufacturing facilities in India right now. And we have already started our trial production there. So for PG Electroplast as a whole, there will not be a major change in the margin profile. Definitely, when we look at televisions is a low margin business, but we have to see television business with the parameters of return on capital employed and return on equity. And because we can generate a very large asset turn on lower capex, so I think TV business is a good business.
It is a good business, but as you said, it would be low margin, so it would not dilute the overall average margins for you, is what you're saying. And what about revenues? How much would that contribute, say, 2 to 3 years down the line?
For the coming financial year, we are targeting our revenue of around 450 to 500 crores in our TV business, in our JV company. That's our target. Going forward, we'll be coming out with the guidance for all the business categories. Maybe in a few weeks' time, we'll be releasing guidance for FY25.
So we'll be awaiting that guidance. But some more clarity is required from you. You spoke about the JV with the Jaina Group. Now, the Jaina Group is a group, that does have connections to a player that has significant presence both in the TV as well as laptop manufacturing, which is the Padgett Group, a part of Dixon. So going forward, are you looking at any tie-ups, directly with Dixon, because they are such a large player and they have onboarded quite a few clientele? So what is the total number of clients that the JV already has, and going forward, what is it that you're targeting there?
So Jaina Group earlier had a stake in Padgett, which is now a part of our Dixon group. Now Jaina is not part of that Padgett group, but definitely Jaina itself has a good network with the industry players, and we are talking to some clients for our IT hardware business also, because our company, Goodworth Electronics, is a recipient of approval for IT hardware PLI 2.0. So we are working on that, and we are hopeful of getting some business into our IT hardware segment also very soon.
Okay, all right. So this is something that you'll be exploring as well. Mr. Gupta, what is the export as a percentage of revenues right now? Is it minuscule? And are you looking at expanding that pie of revenue?
So right now, exports is negligible for us, but we are looking to grow that business. What we feel right now, there is a cost disability between us and China when we compare ourselves with China. So we are working with, once we are able to achieve some critical threshold of economies of scale, and as the component ecosystems deepens in India, we will be able to overcome those cost disabilities. And then I think it's a matter of maybe 2 or 3 years. Exports should open up in a big way for all product categories.
Mr. Gupta, while you did mention that you will be giving specific guidance in a few weeks, across various product categories, broadly, if you could give us a guidance for FY25. FY24, the guidance that you're given is a 2,800 crore top line, a 210 crore EBITDA, and a 7.5% margin. On that, what is the kind of growth that you're expecting?
Please pardon me, I cannot share these specifics right now, but please understand, we are creating a funnel of products. As I told you earlier, we have created a funnel of clients. We are already onboarding a lot of clients in our washing machine business, and we have added quite a few clients in our air conditioner business. We are very bullish on our TV business. So we will be releasing a formal guidance to you, but definitely we target to grow profitably in all our product categories. That is our target.
Okay, Mr. Gupta, we get that point, very close to Q4 numbers as well. So we'll speak to you soon when those numbers are out and ask you for FY25 guidance. But thanks a lot for joining us, and have a great weekend ahead. For us, it's a weekend, it's a longer one. So of course, it's a weekend on a Thursday itself. But we'll do one thing, we'll slip into a break. As we do that, we have a big announcement to share with you all. We are launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate Personal Finance Handbook, with Sonia Shenoy, where she will be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth. Be it insurance, tax saving, managing your portfolio, retirement planning, there's lots to learn and lots to do. Whether you're in your 20s, 30s or even 40s, this live webinar is for you. We have limited seats, so don't miss this chance. Register now. Scan the QR code to register or log on to cnbc-tv18.com and we'll see you on 11th May.